right. Looks like we're going live here, Tim.
Let's do it.
All set. I don't know if we should wait too long to let other people have a chance to get on, or if we should jump right to it. I'll start anyways. We can start with a little bit of background, and then that gives a few more people the chance to get on, and we can then jump into some of the discussion. I'll start with a little bit about my background. I'm Jason Futko. I'm co-founder of CoreConnex. I manage some of the strategy and M&A activity with our firm. My background in terms of experience has been sort of a wide array of different things. I started as a CPA, did that with PricewaterhouseCoopers, moved out, did some consulting for a lot of banks, financial institutions, for a bunch of years, and then moved on from that into corporate finance and advisory services, where I worked cross-border. So I did a lot of transactions that were complicated, structuring transactions between Dubai or the Middle East in general, the UK, Asia, and North America. So spent many years doing that. Came back and connected with my co-founder in CoreConnex, which is Oscar, and decided there was a gap in the private markets that we wanted to fill, and that's where CoreConnex was born. So I won't get into the long, lengthy journey that I've had with CoreConnex, because I've had several positions here, but it's been exciting, and it's been a lot of fun growing a business, especially during this time when you've got all the tools that are starting to pop up. You've got the Jobs Act changes, you've got crowdfunding available, and a variety of other things that make operating in this environment a little bit more exciting. And of course, today I've got Tim Martinez joining me. Tim is also has a very interesting background, and I'll let him give you a little bit of detail about that. He's joining us to discuss the investor acquisition component of crowdfunding. So we'll get a good perspective on that. But Tim, why don't you give us a little
Sure.
tidbit about yourself?
You got it. So I always say that I was the kid with the lemonade stand, and that's my story, and I'm sticking to it. My background has just been very entrepreneurial. As a young man, I had a silk screen machine in my garage, and I was selling T-shirts to kids in my local high school, and then I was a DJ, and I was making mixtapes, and anything I could do to make a buck. Really, is when I was young. That's just how. If I could mow a lawn and make $1 and try to turn it into $2, that's what I did, and that's kind of really where my journey started. By the time I was, let's say, maybe 24, somewhere in that territory, I had already owned maybe 10 different businesses, and I built an advertising agency. It sold it. It was actually acquired by one of our clients. I built a coffee business. I sold that. I built a retail business. I had sold that. I built some apps. I had sold those. And then people started approaching me and say, how are you doing this at such a young age? It was just very scrappy. I used to go to the Small Business Development Center and get some feedback on how to write a business plan, like what is a business plan, how to put a financial model together. I didn't go to school for anything. I just kind of really one step after another kind of stumbled everything and learned how to do it. I also bootstrapped everything I could, whether it was credit cards or friends and family, getting money from uncles and fathers and brothers and just taking money in anywhere I could. And then trying to make good on the money that I got and making sure that I'm giving people their money back with a return and showing them my little business plans that I worked on at the Small Business Development Center. I would work for SCORE, the Senior Council of Retired Executives. I'm dating myself here, but this was all maybe late 90s, early 2000s when I was doing all of that work. And then I decided that I wanted to really try to pursue helping other people build their businesses. And I had some friends that wanted to start a clothing company or start a retail store. So I started helping them get their own bootstrapping and write their marketing plans and do their businesses. So one thing led to another, and I started connecting with other consulting firms that I'd find around the way. I was always networking and working with different groups, and they'd say, well, this is interesting what you're doing, and you know how to write business plans. Can maybe you come here and help us, or maybe you can look at a pitch deck. So fast forward almost 20 years now, and I've worked all over the world. I've built thousands of businesses. I've worked with entrepreneurs and just anything I can do to help someone build and grow and scale their business. So whether that's me speaking at a conference or writing a blog or public speaking or doing these types of things is really what I've dedicated my life to. It's more purpose driven and mission driven. I always believe that if you can make an impact, make a difference, the money will follow, the opportunities will follow. And that's just all I've ever done is just pursued business, because I consider myself a business nerd. I'll read any book I can get my hand on. I subscribe to all these newsletters. I'll send myself to conferences, anything I can do, because I'm just a fan. I'm forever intellectually curious about what drives a business, what drives a business owner, what makes an entrepreneur successful. And after this, all these many years, you know, I've been able to work with very large, publicly, privately held companies, CEOs from all over the place. I'm just like, wow, this is so cool. You know, there's the fact that you can just sit there and hear their story and see the impetus of like what got them started, whether they had, you know, a formal education or not. I find it all fascinating. So about 8 years ago, my partner Jason approached me and said, we should do an advertising agency. I said, sure, let's go for it, right? It's kind of my background. Let's have at it. And shortly after we started this agency, about 2 years in, the Jobs Act had started. And, you know, this is the whole equity crowdfund marketing really just started opening. And a lot of funding portals started coming to play. And we decided that we're going to try to market these offerings, because there really wasn't anyone in the niche offering these types of services to these issuers. And it was a niche that we kind of fell into out of our love for entrepreneurship, out of our love for business. Obviously, I had some experience raising capital through all my years and worked with investment banks and whatnot. And it was just a good fit. It was a good fit. We one deal turned into two, turned into three, and before you know, we've worked on hundreds of deals now. And I think we've positioned ourselves very strongly in the equity crowdfund space. And we have a lot of data and a lot of partnerships. And that's what I'm really looking forward to speaking with you about today, and how we do what we do.
Yeah, and it was great to hear that background. I love the giving back component, and that's what's driven us a little bit at Core Connects as well. You know, and putting together these core talks and our core summits and all our educational series is about, you know, bringing people up to speed, what's going on in the marketplace, what's happening with the Jobs Act, and learning all the aspects of fundraising and managing your business efficiently and within the guidelines, right? So
yeah.
It's very important. So this topic, investor acquisitions, obviously very important to a lot of people, especially when it moves into, okay, look, we've got a business, we've created a business plan, you know, we've got our direction and what we want to do. What's our next step? We need to get some investment in. And this is a constant struggle for small business, as you've known from, you know, your history of, you know, helping people put together the business plans, putting together your own business plans. I've reviewed tons myself as well. So in that process, obviously the hardest part for them is getting that investment in so that they can make their dreams come true, right? Would you say that it's difficult to acquire investors for some of these businesses? And just give us some tips. What are common mistakes that companies make in the process of acquiring investors?
Yeah, that's a good loaded question. Okay, so I would say, like, if we're talking about mistakes, just the first things first is you have to have a story. You got to have your story put together, which is why me, why now, why this opportunity. I always follow the 10-20-30 rule. I think it was Guy Kawasaki who put it together, the Garage Ventures guy, and he was saying, 10 slides. So that's all I'm going to give you is 10 slides. And I've seen people spend months putting together pitch decks, and you get these elaborate 80-slide decks, and they look like business plans. You're like, why don't you just write a business plan? Really. And the whole concept of forcing yourself to think in terms of 10 slides also forces you to think about 3 to 4 bullets per slide. And I always say, if you can put 1 bullet per slide, you're doing even better. And if you can explain it to your 5-year-old and have them say it back to you, you're doing even better. So it's the art of simplicity, simplicity being the ultimate sophistication as a starters, right? Then you should have all the chops to go deep down the rabbit hole if someone asks you further questions, but really just the beginning. So if you're saying, hey, I'm looking for $1 million, it's for this market opportunity, it's growing but exponentially. Me and my team, we have a lot of experience doing this. Here's how your money's going to be applied, the use of proceeds, just the basic talking points. I see, even to this day, I see founders kind of stumbling their way through that. Just a basic, and I love that whole take someone a coffee and say, hey, just tell me about your business. Give me your elevator pitch. If the elevator pitch literally goes from 30 seconds to 10 minutes, I'm lost. I'm gone. So I would say, like, foundationally, getting your story just nice and tight and clean, and knowing who you are, why you exist, why I should give you my attention and time in a real short spurt. That's like step number one. The sound bites.
Right.
It's easier said than done.
Grab the attention.
Yeah, exactly. Grab the attention.
And what types of investors are out there, and from the company's perspective, why would they invest in some of these businesses?
Sure. So we deal in the retail investor space largely. Now let's call it three types of investors, but we know there's many, many different shades. But I'll just simplify it for this talk, right? We have the retail investor that is, I'll call them relatively unsophisticated, but I don't mean that in a derogatory term. They're just not a full-time investor. They're not a day trader. They're not reading the trades. They're not in the journals. These are people that will see an offering, and for whatever reason, the offering resonates with them. So they'll see an ad, and the ad might say, invest in the future of flying shoes. And you think, well, I wear shoes, and it would be pretty cool to fly in my shoes. Let me click on this ad. And you click on it, and it says, for as little as $300, you can become a shareholder in our flying shoe company. And you think, really? I can own shares for $300? This is like groundbreaking. Yeah, of course. So they get in. And that might be the full, complete level of due diligence that they do. Is just look at the landing page, watch the video, maybe follow you on social media, and it's a feel-good investment, right? And that's something that you can talk to your friends about, and your mom. You go to, Thanksgiving dinner and say, hey guys, I just invested in a flying shoe company. I'm now an investor. That would be level one. And that space is where a lot of marketing agencies like ourselves and a lot of groups, that's who everyone's trying to appeal to, is that initial person. The next person is your more sophisticated investor. In many cases, they are your high net worth individuals, accredited investors. They actually have capital. They're not unfamiliar with making these types of investments. They might have an advisor that's helping them, right? They're going to read whatever materials you actually have to present. They're actually going to read it. They will ask you questions. They'll want to know more about who you are and your background. They'll check you out on LinkedIn. They might look into your industry. They may even be diversified in your industry. So maybe they have other holdings in your space, right? This isn't new territory to them. And if it is relatively new, maybe it's just the equity crowdfund portion of it that's new, but they've probably made other types of investments in this territory. They could consider themselves angels. Maybe they have a background like yours or mine, right? They've been in financial markets. They're pretty familiar. They have friends. They might play golf on the weekends and someone says that they're into something. It's that type of audience. It's a little more sophisticated. And then you get into your institutional guys, your private equity, venture capital, funds, family offices, banks. You go down that path. And these are people that do this for a living. It's how they make money. This is what they're looking for. So they're looking for early stage opportunities as well. Everybody's looking for the bell of the ball, if you will. Everyone's looking for the golden trophy here. Everyone's looking for that next big return, that unicorn. So whether it's, my cousin who may not know anything about investing, or your best friend who works as a fund manager, everyone still wants a good offering. We just may be doing different levels of investing. So I would say those are three really simple tiers. Now within that, you have all kinds of shades, but those are the types of investors, I would say.
Okay. And you made a really good point there with the flying shoes. It spoke to you as a potential customer of the business. So Reg A Plus has sort of come out and helped you turn your customers into investors. How is this profitable, and how is this good for companies?
Sure. So there's terms out there that are floating around. I don't think anyone's fully coined one or trademarked one, but we'll use investomer for now. This is the investor customer. Again, let's go back to our flying shoe company. If we had a social media following of 100,000 followers, and these people had been following just the product, and they were just customers of the product, or they've been waiting for the new release of the next upgrade that can take you to the moon, you're just following it because you're a fan of the brand. But the second I create an opportunity for you to actually invest into this business, you're now a brand advocate and an investor. So you're even tied deeper into the brand, into the product. You'd be even more willing to come back and buy from us because you know that this is benefiting you as well. Every dollar you spend, you're just spending it into your company. I mean, we can feel this same sense of ownership in public markets. I own shares of Tesla. So if I drive a Tesla, well, I'm driving something that I have shares in. But it's publicly traded company. It's a completely different experience because anybody can have access to that level of investing. This actually has kind of this, I'll call it cool for lack of a better word. It has this like cooler, a little more underground, a little more like you kind of have to know someone or know the brand. You get in really, really early. So you have this pride of ownership that's going to be very different than if you and I bought some shares of AT&T today. I don't really have a whole lot of pride of ownership of owning AT&T, but I could have pride of ownership of owning some new Reg A Plus offering that, you know, for whatever reason resonated with me as an early stage investor. And that brings me deeper into the brand. Like, for example, let's say, I don't know, 30, 40 years ago, a young man named Ralph Lauren said, hey, I'll offer shares of my company just to, you know, private investors, and you can get it through this offering platform. Of course, that's really cool. You know, there's something unique about that. And that is what I think is revolutionizing a lot of what we're seeing right now. That concept, that notion of I could have got in early on Billabong or some of these brands that I grew up with as a kid, as a surfer, or something that, you know, it took years and years for these companies to go public, but I could have got in early. That's cool. You know, it has that thing about it that it's really hard to say about the investing space. You know, a lot of the stuff has just been so traditional, been around for so long. So, you know, Ameritrade, is there anything that's really cool and hip about jumping on and just buying some stocks? Maybe, but you got to be really into it. You know, this whole equity crowdfund space, the Reg A Plus, some of the brands that we're seeing come into the space, not even just brands. I mean, it could be a B2B offering, some technology that will take you to space. It's interesting stuff.
Yeah.
To get in early on this stuff, I think it's ringing the bell a little differently than I think it has before.
Yeah, it could be the brand of tomorrow, right? You don't know. I mean, that's what creates the excitement. And that's kind of what pushed, I think, regulators and people like David Wheel to sort of mentor and push to get those rules changed, because people wanted to get involved earlier in the Facebooks, you know, whatever it was that they were excited about at the time, and just didn't have the opportunity. They didn't meet that accredited threshold, so they weren't able to invest, even if they were to see those offerings, because you know, there's 4% of the population's accredited, but I'm sure most of them never saw Facebook prior to it being public either, right? So, you know, one is the opportunity, and two is actually being able to see the deal when it's around. So that push to get those deals in front of people, I think, was a big thrust behind it, and obviously create that liquidity in the marketplace for these companies to bolster investment and job creation. From the perspective, and sorry, I don't want to harp on that too much, but that brand ambassador thing is something that we tout and push a lot as well. So, you know, even if you look at most of our educational series, we believe it's important to keep your investors engaged, even post the offering when you've closed the investment, and make sure you take care of them, because they are customers. You know, they're there to be a part of your business for the long term. So they believe in you enough to buy your business. They're definitely ambassadors of your product. So that's 100%. From the analysis side of your business, and I don't know how much we want to harp on this, but your firm analyzes a lot of data when it comes to these offerings, and you know, you look at the audience and you target the market. Can you tell us a little bit about the type of information, or how your firm sort of analyzes that market to sort of assess the best approach for some of these companies?
Yeah, sure. So we do a lot of our advertising on Facebook, but there are every platform under the sun that you can advertise on. So let's just get that straight. You can advertise on Twitter, on LinkedIn, on Facebook, on Instagram, on Snapchat, on TikTok, right? There's really no limit to what you can do. We use Facebook for a variety of reasons. Facebook owns Instagram, but we're able to target through audience data, historic audience data. So every time we run a campaign, our data gets better and stronger and stronger. When we work with a brand that has an email list, we can upload that email list and use that for further targeting. We can build what's called lookalike audiences off of it. We can build on behavioral and contextual who do these investors follow? Where do these investors live? What's their demographic information, their profile? What audience is clicking on which ads? Maybe people in the Northeast are clicking more on this ad, and people in the Southwest are clicking on these ads. We get a lot of like audience data in that way, and also the creative. What's a better call to action? What's a better messaging? What's the visual? That information we use to optimize our campaigns. So initially, when we start a campaign, we'll generally start with about 6 to 8 ads, and we'll let those run for a period of time, and then we start to optimize from there, and optimize and optimize. And after a period of time, we have a pretty good idea on who the audience is that's going to resonate most with, what's the messaging, what's the creative, and then we can go deep down that rabbit hole and just keep optimizing further. We always say test, optimize, scale. We have a podcast my partner Jason runs. It's on the concept of testing it, optimizing it, and then once we know what's working, then we're able to make recommendations on let's move our budget from X amount of dollars per day to maybe double down, triple down. The only reason we would ever scale is because we're getting investments. We're actually seeing more clicks, more conversions, more investments. So that's the game that we play. The game, it's an advertising game primarily driven. That's the top of the funnel. It's bringing traffic to the page. And then once the traffic's at the page, then it's a matter of working them down the funnel. And we can talk about content and things of that nature. But the data that we look at, all audience data. Who are these people? Where are they from? What's the data points? What are they clicking on? Who do they follow? What do they read? What publications are they into? Right? We can track and target based upon as many filters as we want to put out there. So we've been doing it for quite some time across hundreds of campaigns. As I mentioned, we started as an ad agency, and we've been doing this for 6 years in this space, particular, probably pushing up on 7 now. So we have a lot of historical audience data that plays to our favor as well.
Right. And just to distinguish a little bit, what is the difference between marketing the offering versus just marketing the business in general?
Yeah, that's a place where a lot of people get stuck, by the way.
Yeah.
It's an easy place to get stuck. So let's talk about that for a little bit. The Flying Shoe Company. It's very easy for someone to look at an ad for Flying Shoes and think, this is a cool ad for Flying Shoes. Let me click on it in hopes that I can get to a place where I can buy the Flying Shoes. What happens a lot of times is that ad could even be very clear. It says invest in the future of flying shoes, but the audience might only see flying shoes. So they get to the page and they're like, well, what's this? I just came here to buy shoes. I didn't come here to make an investment. I don't know anything about this investment, right? And then they'll bounce off. So sometimes we have to think about the messaging. Maybe it's not invest in the future of flying shoes. Maybe it's in did you know, maybe it's a did you know ad. Did you know that 90% of people wish they could fly to work, right? Would you invest in an opportunity where the future of mankind can fly to work versus flying shoes? Because in the visual and what's in the ad and what's the messaging. So this is a lot of the stuff that we have to test, right? This one ad seems really cool and it gets all the clicks, but it doesn't get the conversions. This one right here might speak more to the investor, the investment opportunity. And if you were to join any of the DNA team calls every day, you would know that we spend an ungodly amount of time talking about the investment opportunity. What is the real opportunity here to invest, right? It's not just so I can buy flying shoes. It's that I can change the face of mankind to make travel easier, right? These are these bigger holistic messages that we're trying to get out there, because then we're resonating at a different level. And then this is what picks up on the investors. Because once you can cross that chasm with a prospective investor, they go, oh, there's what we call the aha moment. I get it. I didn't get it until now, but oh my gosh, this is going to be huge. I mean, there's going to be no more plastic. If I invest in this company, there's no more plastic for the rest of mankind. Wow. Whereas before, you were just thinking you're investing in some new metal company, right? I'm investing in new metals. No, that's not the point. You're investing in a plastic-free world, right? So that's our job as marketers, is to take that message and can amplify it, magnify it, and try to tell something that's going to get a better click and a better conversion.
Right. Well, you also touched a little bit on some of the mediums that you use: Facebook, Instagram. Are there other mediums that you guys generally use? Video, TV, trade publications, conferences. What other forms of media out there, or publications or sources, would you tap into in terms of getting the message out on these offerings?
Yeah, so we break it down into advertising, content, and outreach. Those are the three that we always break it down to. And then everything generally falls into one of those three buckets. So with advertising, again, I mentioned this is top of the funnel. It's putting an ad out there, getting someone to click on an ad and take some kind of action where they're going to end up on your page. Now, we can drive traffic from any source, right? It can be a podcast, it can be a display ad, it could be a Google ad, it could be any channel. We use what we use because we know it so well, and we know we've tested a lot of other platforms. That's why we're a little bullish on the platforms that we like, because we know we're getting better audiences, better clicks. But when it comes to advertising, you can literally test anything. As much money as you have to throw at advertising is as much advertising as you can buy, really. Right? You look at Super Bowl ads, people are spending millions and millions of dollars just from these 30-second clips. So, I mean, you can spend as much money as you want, right? But that's the top of the funnel. That's advertising. The second piece is content. So when it gets down to content, I mean, this is content. You and I are creating content right now, right? We have some cameras, we have some laptops, we have a platform, boom, we're live. There's no limit to the amount of content that you can be creating, by the way. And we recommend that founders take it upon themselves as well to just pull out this device, right? Everyone has a phone and has a camera on it and video. Start creating content all day, every day. Have everyone on your team, have your advisors. I mean, really just pull together and create content. Us as an advertising agency, you know, we have to have a systematic and very structured approach to it because we have a certain volume of clients. So when we're working on our content calendars, it says, okay, on these days we're doing these posts, and we're going to produce a webinar once a month, and we're going to do, you know, weekly portal update, and we're just doing all this best practice stuff that has to be done as an agency to keep the ball rolling forward. That's social media, that's blogs, articles, like I mentioned, webinar production, press release writing, whatever we can do, that's our job. But again, we can't touch everything all the time, all day, every day, right? So it's a really, it takes a village to do these capital raises. They're not for the faint of heart. So we say, well, let us do what we do. Let us be the consistent, steady engine that can, just day after day, just pushing and pushing and pushing. The founders, the founding teams, why don't you guys just be the paint job of the engine, you know, just go out there and do all this extra stuff if you can. You know, start a TikTok channel, go live on LinkedIn, go live on Facebook, go live on YouTube. Test it all, do everything. Nothing's off limits because we're going after retail investors, which means we can literally talk to anybody. We can talk to anybody. We just keep going out there and talking and promoting. And then the final piece is what we call outreach, the third part. This is where you mentioned publishers. So reaching out to Forbes and Entrepreneur and, you know, Cointelegraph or Crypto Weekly or whatever it is that you're into, whatever your offering is, Real Estate Journal, reaching out to these publishers and saying, hey, we have an offering and we think this offering is relevant to your audience. Your audience is into these types of things. What we're doing is a perfect fit. How do we work together? How do we get some content? You know, there's a lot of options out there. There's a lot of publishers. There's everything from your tier 1 mainstream publishers like Forbes, all the way down to your tier 3 publishers that are, you know, maybe someone runs a local blog on Substack, but they might have 10,000 subscribers. They might have 1,000 subscribers, but they're really engaged. Or maybe it's an influencer who has a YouTube channel or social channel. Reaching out to all these people all the time, every day throughout your campaign is what will move the needle and make the difference. We like to start at the planning level, the strategic planning level. So people ask me all the time, well, if you were going to do a crowdfund next week, what would you do? And I would say the only thing I would do is plan. I would plan. So it's not a surprise. I'm not like playing catch up. I'm not behind the 8 ball the entire time throughout the campaign. I'm very intentional about every move that I'm making. It was well thought out, well planned. I got my team in sync. I have my messaging that we talked about. I got my elevator pitch. I have my 10-slide pitch deck. I have all the tools in my tool belt that I need. I have everybody aligned on the central mission, the vision, what our catchphrase is, and what's going to move the needle. I have all my creative assets. Everything's dialed. So when I push go, I'm not wasting time, and I'm not wasting time.
That's a good point. And for anybody listening, it is that much work. There is a lot involved in this component of your offering. Um, Even when we're talking to early stage companies looking to raise the capital and get moving, and they talk about costs and they talk about Reg A, regulation, crowdfunding, whatever it is in terms of getting their offering moving. There's been great efforts, some monumental, in getting the cost of the offering, down, and making cookie cutter pieces of it where possible. You can get legal services sort of tailored for this at lower costs than when it first got launched. Your audit costs can be sort of managed. You've got a bunch of costs related to this transaction when you look at the totality of it, but this is where you're going to want to spend a lot of attention. It's in this component because obviously getting the messaging right, getting the marketing on side, making sure it's all cohesive, getting your plan together, as you mentioned, testing different approaches. That's key. Sometimes your approach doesn't work at first. Sometimes you got to retool and you got to rethink and you got to go back to the market with a slightly different message or in a different way, and do that to make sure that people understand it, they get it, and in that process, obviously, you want to make sure that you spend as much attention to this, and that's why a lot of your money in this offering goes towards investor acquisition, because it's a key piece, and I think people understand that. But with that, there's also another side to this, right? You mentioned earlier that you can approach sort of anybody in this space to invest, but there are limitations and restrictions on what can be said and what can't be said. There's laws and regulations like there is everywhere else, and the SEC is very strict on regulations when it comes to soliciting investment. So, can you give us just a broad? I don't want you to get into obviously details here. We leave that to issuers and their lawyers and their team themselves. But give us sort of a high level of things that they should watch out for in terms of promoting an offering.
Yeah. We always say as a marketing agency, we try to keep our hands as crystal clear as we possibly can. We're not a registered broker dealer. We're not a financial advisors. Always consult before you make your investment and all that kind of stuff. Also, it's great to have partners like CoreConnex because we can rely on your experience, your background. Your background is wildly different than mine. Even though we have a lot of similarities, it's like when we're working together as a team, I say, I don't know. I quite frankly don't have the answer to that. Call Jason. You can talk to them. We can talk to compliance officers, right? We're kind of all in it together right now. That's what's cool about this industry being so small, is that I don't really see a lot of headbutting and competition. It's like everyone's pulling resources together and advice and guidance and experience. So with that being said, I would say lean on your funding portal partners, your compliance officers, and all that. Now, what don't we want to do? The SEC, for everything that they do, their intention is to keep any issuer from being a swindler and a charlatan and taking money from well-meaning individuals and stealing the last pennies of a little old lady off the table. And that's why a lot of these rules are in place, just to protect the investors. And we respect that. And look, every now and then there's an ad that might go up with one word or one phrase, and the rules change all the time. So we're always trying to keep up with what you can and can't say. I'll give you an example of something that you should not say. Invest in Flying Shoe Company today. We're going to go public tomorrow, right? I can't guarantee I'll go public. I can't guarantee the timeline. I can't guarantee. Oh, the other thing to add is that you will become a millionaire. I can't guarantee you can become a millionaire. I can't guarantee you can become rich. And in these forward-looking statements where we're making claims in advance in the future, these are things that the SEC they don't sign off on. Those are somewhat of the no-no. Now, what we tend to talk about is the market opportunity. So we'd say there's 8 billion people on the planet. Maybe 7.5 billion of them wear shoes. That's our audience. It's an evergreen market. People need shoes, right? And we would touch upon these market opportunities versus saying, we're going to be a multi-billion-dollar company next year, and if you invest in today, the share price is going to go from $1 a share to $1 million a share. These are things that we can't guarantee. These are things that nobody has the crystal ball on. But if we're talking about the market opportunity, if I could talk about the experience, so I'd say, hey, I brought Jason on as the new CEO of our company. He's worked for 30 years on Wall Street. He has all this experience raising capital. I can talk about that. I can talk about that all day. I can talk about my manufacturing partners. They have the most sustainable practices. I can talk about my distribution partners. We're going to be inside of 5,000 Costco's the second we launch. Like, these are things that I can mention if they're legitimate, they're in stone. But I just don't want to be misleading at all in any respect at any level. And that's the thing that sometimes, we're talking about hundreds of campaigns, hundreds of ads. I mean, in a given year, we're looking at thousands of pieces of content that go out. So we do our best job. We read anything that comes out by the SEC, any new information is provided to us from one of our portal partners. They say, don't use this, or everyone starts to circle together and say, there's a new ruling, you can't say this, or you can't mention that the deal closes in 3 days, or you can't mention timelines. When this new information comes in, we just do our best to incorporate it. We do our best, right? Because we don't want to be misleading anybody. Those are the things that we generally tend to look out for.
Right. And you're right. There is a lot of help in that space. Your funding portal typically would help on the crowdfunding side, your broker dealer on the Reg A side if you're using one. Obviously, your legal counsel's there to support you as well. There are due diligence reports out there that can be purchased as well, that do a little bit of kicking of the tires. There are certain things you want to make sure that the charlatans aren't there, as you said. So getting those reports and that due diligence piece out of the way is important, so that we can build trust in this ecosystem and make sure that people are confident when they go to the crowdfunding portal or when they go to a Reg A Plus platform and click invest, that some work has been done in the background and somebody's kicked the tires and made sure that Tim actually is the CEO of that company and
Right.
he's legitimate, right? So those are the kinds of things that need to be done to keep the trust in that marketplace. And of course, as you mentioned, Core Connects is a piece of the puzzle, but all of these DNA, like every partner or ecosystem is there for a purpose, and we try to continue to build on that so that we've got trusted partners that you can call on to fulfill each need within the fundraising or even outside the fundraising. The business continues after fundraising's done, so you still have ongoing requirements and things you need to do. So it's important to continue to report, continue to maintain that communication channel with your now shareholders, then investors, right? So in terms of vernacular and terminology, they sort of switch over, but all of that is part of this process, and that's why education is hugely important. We brought up education early on when we started this, that we're doing this for education purposes. Obviously, it was the reason we started Core Summits and the Core Talks. What other education is involved? Do you guys get involved in anything else in terms of educating the market? What should investors in this marketplace expect that's a little bit different from what they normally would sort of see in the investment side?
Yeah, sure. So when it comes to all the compliance information, the laws, the regulations, I tend to look to companies like yours to sign up on the newsletter, to read the blog, to watch videos just like this, and to get my information. So if there's any issuer out there that's considering a capital raise, I would say sign up for Core Connects newsletter, sign up for the summit, right? Just go down the rabbit hole, read as much information as you can, call somebody, get on the phone, have them send you articles. Always do as much self-education as you can. As far as DNA goes, what we try to do, and we have, I don't know how many prospective issuer calls a day in a year. It's, talking a lot of groups. We shoot everyone straight. We just try to shoot people as straight as possible. Look, we don't have a crystal ball as a marketing agency. I wish we did. We don't. no one can guarantee that any deal is going to get fully funded. So what we say is look at the statistics, just look at the stats of what's currently happening in the industry. Look at the deals that actually started and hit 100% funding rates. Go to Kingscrowd. Kingscrowd is a phenomenal source for this information. You can see what new deals are listed, how long they've been active, how many investors they've brought on, how much capital they've raised. You can deduct the information. So if you see that someone's raised $1 million from 1,000 investors, you can just assume the average investment was about $1,000 just by doing some basic math. So I do that all the time. Is I'll just sometimes hop on a portal and I'll look at any kind of random deal and I'll just subtract how many investors versus how much was raised, just to give me a benchmark of like, are we still seeing the averages, the average order investment? I know we have our own data, but sometimes it's good to look at deals that we didn't do the marketing for, and I can see consistencies. So I would say that type of education is education that we're doing ourselves, right? So if we as a marketing agency are doing that type of information, then you too, as an issuer, should be doing that same level of education, right? Go to Kingscrowd, look at as many deals as you can. And look at phenomenal deals. This is something we ask our team to do when they get started. We say, go look at the top performing deals in the industry over the last 2 years. Look at the landing pages. Watch the videos. Sign up for the newsletter. Read the portal updates. Look at the creative. Look at the photography. Look at the graphic design. Read the messaging. Kind of hear the creative copy that they use. Look at the industries that they're in. You're going to start to see some through lines. Then go look at the worst performing deals. Doesn't mean they're bad companies. They're just poor performing offerings. Deals that have maybe raised $3,000 and they've been around for, they've been live for 6 months, right? What you'll start to see consistencies when you look at the poorest performing offerings, that the landing pages weren't really there, the offering videos, it's just something about them wasn't hitting. Maybe the founding team didn't have the bench, right? The depth of experience wasn't really there. Maybe the market opportunity was off. Right, so you'll start to see some through lines of the best performing deals and the worst performing deals, and then you get to ask yourself like, okay, where do I sit in the spectrum? Right, I have to take a hard self-assessment and say, is my stuff as good as XYZ company that raised $20 million in 2 hours or whatever it is, right? That's the level of education we do all the time. We're constantly doing that. So I would say speak with groups like ourselves, speak with groups like yours, get intel, speak with your team, share that information, get feedback, and then look, all entrepreneurs have that come to Jesus moment where you got to draw a line in the sand and say, okay, I have all the information, I've done all my analysis, I got to stick my neck out on the line, we got to go. Well, we're not, but you can't do analysis forever. Analysis paralysis, right? You get stuck doing that. You have to take the information and then say, okay, I'm ready to drop the hammer. Let's go for it.
Yeah. And it's from our perspective, we see a lot of investors that come with questions, right? Because we're kind of in the middle of the process, so we get questions from investors who have invested, who are looking to invest, all the way through the process. One that I like to caution investors on is it's not there yet. It's not a public market, right? You're not investing now and owning the share in 30 seconds and it's in your brokerage account, right? Mm-hmm. Like there's a time lag. You invest in a private company, the money has to come over. It's not instantaneous. The broker has to do their KYC, ID, AML checks on the investors in some cases. So there's a time lag between when they pull the report, when they get time to review the report and approve all the investors and match it to the fund. So sit tight. There can be a little delay in that approval process and the closing process, right? They're not going to close every time an investor comes in because a closing is an official process. So sometimes they're waiting a week, a month to do a closing. And then when that closing happens, you could get swept up in that as an investor. And then you'll start seeing your stuff hit your account a little more. So just that sort of educational stuff is very important. And as Tim mentioned, there are sources. Please look for them. We do our best to try to fill that gap and put out information that's useful. I don't want to, belabor this, so I'm going to turn it back to Tim and just see if there's anything that I've missed. Tim, anything important that
Yeah.
people should keep in mind?
Yeah. So there's some fundamental pieces. We talk a lot about having the right framework, right? If we can build the bones of your campaign with the right infrastructure, then we're giving your campaign the best chance of success. So although we don't have the crystal ball, we know what the framework needs to look like because we've done this enough times. So some of those things are, before you launch your campaign, making sure you have a really good strategy. If you guys need support with that, call us. The other piece is making sure that you have your investors ready to go. So having enough investment when you launch your campaign is really important. A lot of people launch with $0 pre-committed, and that's an uphill battle that's very rarely won, if you will. So making sure that, whether you have some lead investors, some friends and family, you can kind of project a bit. Now, whether you're doing some test the waters to get you there, you need to make sure you're priming the pump. The next thing is, average investment amounts. So this is a volume game. You're going to need thousands of investors to hit your goals. Average investments amount could be anywhere from $1,500 to $2,500, right? That's just what it is. So if you're trying to hit $10 million goal, you might need to bring in 5,000 to 7,000 investors to get you these numbers. So just being prepared to spend, being prepared to play the volume game, and these aren't done in short sprints. They're done in long marathons. So if you're looking to get in and get rich quick, this isn't the place for you. But if you're looking to build something where you're trying to connect with your audience, then I think this is a phenomenal opportunity in groups like ours, groups like CoreConnect. This is where it's done. This is the game, and this is the future. So we're always here to have a conversation with anyone. So if anyone needs any advice, any information, you can email us, you can call us, get connected, you name it. But we're here to empower entrepreneurs and really just play our part in this new industry.
Great. Well said. Well, I appreciate you taking some time today, Tim, and giving our audience a bit of information, education, as always. And yeah, as you said, if you need help, please feel free to reach out to anybody in our ecosystem. Tim's there, I'm here. We're all around to help and support. Thank you very much, and hope you learned something.
Thanks for having me.
Appreciate it.